Good morning and welcome to a new week. Don't get distracted by the Chinese balloons in my background here, and let's jump straight into the topic of what I believe could be a strong catalyst for Chinese listed companies in the United States. And basically the topic here is that delisting is finally really off the table. So somebody on Twitter tagged me here in his tweet, and I always appreciate that. Please go to _mm85 and follow me on Twitter if you haven't done so yet, because I wasn't aware of this news yet. This Twitter user here found out that from the SEC's website, there's an update dating around 3rd of February that there is no issuer at risk of having security subject to trading prohibition under the Holding Foreign Company Accountable Act. So this is actually the update on the SEC website in particular. And what does it mean? Well, it basically means that previously, and I covered that one on my channel, we had the news that the PCAOB went to China, went to Hong Kong, and was able to inspect the work of the auditors that are auditing Chinese companies, right? So PCAOB came back, and that's what I reported last time. Was happy that they got full access to those works, the auditing works. And this essentially meant that China was fully compliant and kind of already indicated that, well, probably Chinese names are not going to get delisted from the US exchanges. Now, what's important about this update is that this is not coming from the PCAOB, but from the SEC. As you know, SEC is having this list of companies that are identified, that they are under this Holding Foreign Company Accountable Act. And we all knew that before, like when the Chinese names filed their annual report, they are basically added to that list. And basically from then on were threatened to be delisted if they would not comply with the rules under this Holding Foreign Companies Accountable Act. Now, here's the important update, which is now that basically, as noted, the PCAOB vacated its previous determinations that it is unable to inspect and investigate complete PCAOB-registered public accounting firms headquartered in mainland China and Hong Kong. Accordingly, until such time as the PCAOB issues a new determination, there are no issuers at risk of having their securities subject to a trading prohibition under the Holding Foreign Companies Accountable Act. So this is basically the official news here, that the SEC is also in the views that there is no delisting happening unless maybe at some point in time, maybe China decides, or Chinese companies or the auditors decide to not grant access to PCAOB oversight anymore. But that's currently not the case. And so meaning none of these companies currently is facing a delisting. And I think what is remarkable about this news is that this is kind of something official from the SEC finally, which is of course responsible for this matter. And therefore, this should, in my views, enable more conservative funds, such as pension funds or conservative fund managers, to consider these names again, or if they already have considered them, to extend their exposure to it, meaning buying more shares, because this is basically the legal acknowledging that such delisting is currently off the table. And this is, I think, an important catalyst in the long run, because this maybe doesn't mean that now from tomorrow they start buying again. But, it's really important in a conservative industry like the financial industry that, for example, fund managers, don't look dumb if they load up Chinese shares and then suddenly they get delisted, right? Knowing that there was the risk. Now they know the risk doesn't exist anymore. We can, of course, expect the Chinese companies and the PCAOB overview to continue here. So therefore, this risk should be eliminated in the long run. And this is great news in my point of view, therefore, and should act as a catalyst in the long run, that whenever we get more buying pressure on Chinese shares, again, this should have additional people and demand coming in for Chinese names. At least that's my reading for now. If you are on contrary views, let me know down in the channel below. This also means that especially our loved names like small caps, for example Xunlei or Sap Health, that have no secondary listing in Hong Kong or so on, are not facing the issue anymore that there is no trading on the NIS, New York Stock Exchange, available anymore. That's great news in my point of view. This is also enabling us to double down on positions that we were possibly down on, because we don't have to fear that that is an issue anymore. So I hope that's great news to start the week. Thank you guys for watching, and see you in the next video.